Well, tech stocks have been in focus and have been under pressure over the last few months, and the situation is no different for Indiamart. Indiamart is down 50% plus from its 52-week high of 9,700 rupees, currently languishing at around 4,400 rupees the stock, and it's also down 30% plus year to date. What BOFA Securities is saying is that Q4 margins will continue to be muted, which will mean that the stock will continue to be under pressure. They're saying that this large underperformance will be due to the employee expense hitting the profit of the company. They are expecting more hiring of employees, especially in its sales and servicing business as the business ramps up. And they're expecting wage inflation to come through as well. They're expecting wage inflation of 15% to come through. And that means that their EBITDA margin for Q4 will be at 37% versus 41%. A clear drag on profitability as well. What they are also expecting is that operational leverage, which is typical for a tech company, will not kick in for Indiamart, largely because the sales are driven by its people and they would need to keep adding more employees as the company scales up. They've cut their FY22-24 EPS estimates by around 2% or thereabouts, and as a result they've lowered their target price as well. What they are also suggesting is that competition in this space will continue to remain high. We do have the likes of Udaan and Moglix coming through and gaining scale. They are also suggesting that Justdial is ramping up strongly in its B2B space, so that will be a good compete as well. Of course, small ticket acquisitions have helped the company as they try to look to fill gaps. They've made 14 investments in startups since August of 2019, and they're filling those gaps in fulfillment, enablement, and commerce, and that may help over a period of time is what BOFA is saying. However, they continue to maintain that underperform on unfavorable risk reward is what they're suggesting. The current target price which they've given for the stock is around 3,285 rupees a share, which is roughly 25% lower from its current market price of around 4,400. So clearly the stock will continue to remain under pressure. Profitability will continue to remain under pressure is what BOFA Securities believes. Of course, the other piece is that the acquisitions would of course help over a period of time, which we will have to continue to assess to understand the repercussions of that. But broadly, a sell at the moment and underperform on Indiamart.